Good afternoon. My name is Adan Salemaranyo from Group 4, and I will discuss the investment decision and working capital decision. We have here an investment decision, which is evaluating the risk involved, measuring the cost of fund, and estimating expected benefits from a project comes under investment decision. Investment decision is one of the important scope of financial management, refers to the decision that involve the investment of various resources of the firm to gain the highest possible return on investment for their investors. The two major components of investment decision are the capital budgeting and liquidity. A firm has to also keep in mind the scarcity of resources. It includes carrying out financial decision on a long-term basis. For example, investing a new machine to replace an existing one, or getting a new fixed asset, or opening a new branch. Such decisions are extremely important for any organizations as they control the decisions regarding its earning capacity in the long run. The next is working capital decision. Decisions related to working capital is another crucial scope of financial management. Decisions involving around working capital and short-term financing are known as working capital decision. Working capital decision is a short-term investment decision. Such decisions involve decisions regarding the level of cash, inventory, and receivables. Short-term decision required in the everyday working of a business and also influence the liquidity as well as the probability of a business. The essential elements of sound working capital management are efficient cash management, inventory management, and receivables management. There are several projects available to the firm to invest in. The projects has to be analyzed cautiously and once selected or rejected based on the volume of the return. That's all. Thank you.
Hello, I'm Kenneth Tolentino and I'll be discussing the dividend decision and financing decision. So first, dividend decision. Dividend decisions are financial decisions that are made in relation to the distribution of company's share of earnings to its shareholders in the form of dividend payments. So dividend decisions relates to how much of the company's net worth or net profit is to be distributed to the shareholders and how much of it should be retained in the business for meeting the investment requirements. So these decisions should be taken keeping in mind the overall objective of maximizing the shareholders' wealth. So next is financing decision. So this is the most basic type of financial management, the financial decision. So financial decisions that are made in connection with the raising of funds, identifying multiple sources of funding as well as the amount of money to be raised from long and short-term sources. So it's part of the process. So a financing decision is concerned with the borrowing and allocating of funds that required for the firm's investment decision. So financial management has an impact on aspect of organizational activity, including both profit and non-profit organizations.
Good day everyone, my name is John Barleta. First, I will discuss introduction to nature of financial management. Finance management is a long-term decision-making process which involves a lot of planning, allocation of funds, discipline, and much more. Let us understand more about the nature of financial management. It includes estimation of capital requirements because financial management helps in anticipation of funds by estimating working capital and fixed capital requirements for carrying business activities. In addition, it decides capital structure that manage to have a proper balance between debt and equity should be attained, which minimizes the cost of capital. There is also management of cash to observe its movement, which we call the cash inflow and outflow. So now let's move on to the risk and return evaluation. First, nature of FM, which basically involves decision where the risk and return are linked with investment. That's why generally high-risk investment yield high returns of investment. Within a firm, there is a financial manager who effectively calculates the level of risk a company is involved in and takes the appropriate decision we can satisfy shareholders and investors or founders of the company. We all know that the financial manager has the major capacity to manage, analyze, and evaluate plans when it comes to funds of a specific firm. The risk and return analysis or evaluation aim to help investors find the best investment. Yun lang po.
Good day, my name is Everdo Rosisea and I'm reporting capital requirement estimation and wealth management. First, I'm going to report this capital requirement estimation. Capital requirement estimation. The capital requirement is a sum of funds that your company needs to achieve its goal. How much money do you need until your business is up and running? You can calculate the capital requirements by adding funding expenses, investment, and startup costs together. By subtracting your equity capital from your capital requirement, you can calculate how much external capital you are going to need. The capital requirement should be calculated as accurately as possible. If you plan too conservatively, you may not be able to compensate for unforeseen financial problems. Capital requirements are regulatory standards for banks that determine how much liquid capital, easily sold assets, they must keep on hand concerning their overall holdings. Expressed as ratios, the capital requirements are based on the weight risk of the bank's different assets. What is underestimation of capital requirement? Undercapitalization in terms of business means a scenario where a business faces a shortage of funds or capital requirements to continue its day-to-day operation. This is prevalent or generally seen as a problem with small business firms. Next is wealth management. Wealth management is a part of financial services that assists you in managing your money and provides you with advisory services. Wealth management includes comprehensive guidance on finance, taxation, estate, and legal. What does wealth management do? Wealth management is a comprehensive service focused on taking holistic looks at client financial picture, including services such as investment management, financial planning, tax planning, and estate planning. Why do people use wealth management? It helps you grow and protect your wealth while minimizing risk. Set and development strategies to meet your financial goals. Manage your investment based on your risk tolerance time horizon. Why wealth management is the best? A wealth manager can provide advice on how to restructure your finances in a way that minimizes your tax liability. This is especially important if you own your own business or have multiple income streams. Estate planning. A wealth manager can help you develop a plan for what will happen to your asset after your death. That's all, and thank you.
Next naman po is a valuation of a company. Primary nature of financial management focus towards valuation of company. That is a reason where all the financial decision is directly linked with optimizing the value of company. Finance functionality like investment, distribution of profits, earnings, raising of capital, etc. are the parts of management activities. Example po natin sa valuation of company is the process of determining the economic value of a business. Example ay During evaluation process, all the areas of the business are analyzed to determine its work and works of its determinants of units. Next naman po natin is improve company stocks, shareholders, and value. Increase the amounts of the returns of shareholders by lowering the cost of operations and increasing earnings according to the company mission statement. Example naman po natin dito is the finance manager's primary focus should be the increase the revenue by obtaining cash from variety of sources and investment. First na natin gagawin is revenue growth. Second is increasing operating margin. And third is increasing capital efficiency. Yan lang po. Thank you po.
Morning, my name is Myrene Javier. Ang topic ko po ay source of funds. In every organization, the source of funding is a critical decision to make. There are long-term, medium-term, and short-term. Source of funds, every organization should truly research and evaluate various sources of money. Example, stocks, bonds, debentures, and so on. Before selecting the most appropriate sources of funds, with the least amount of risk. Ang pinagmumulan po ng bondo sa bawat organization ay isang mahalagang desisyon na gawin. Dapat na mabusisi ang bawat organization at suriin ang iba't ibang pinagkukunan ng pera. Halimbawa po, ang mga stock, bond, debentures at iba pa, bago pumili ng pinakamainam na pinagkukunan ng pondo na may pinakamababang panganib. Po ang selective investment. Before committing the funds, it is necessary to truly examine and assess the investment proposal, risk, and return characteristic. Appropriate decision need to be made for selecting right type of investment options. Ang selektibong pamumuhunan, bago isubmit po ang mga pondo, kinakailangan na mabusisi at suriin ang mga katangian ng risk. Kailangan gumawa ng angkop na desisyon para sa pagpili ng tamang uri ng mga options sa pamumuhunan. Ayun lang po. Thank you.
Good afternoon, everyone, especially to our professor, Mr. Bondad. I'm Giselme Articson, and this is the continuation of the report of Group 4. So let's start. I'll be discussing control management and few additional nature and scope of financial management. First, let's talk about control management. So what is control management? So here in our presentation, control management in finance refers to the processes and procedures implemented by organizations to ensure effective financial control and risk management. It involves the establishment of internal controls, policies, and practices to safeguard assets, prevent fraud, and ensure compliance with financial regulations. So, by implementing control management practices, organizations can minimize financial risk, ensure the accuracy of financial information, and maintain the trust of stakeholders. It also helps us in making informed financial decisions, protecting assets, and achieving financial objectives. So let's move forward to the few additional nature and scope of financial management. So there are other techniques that may be used, such as setting specific standards for company in advance, comparing the actual cost or performance with pre-established criteria, and implementing all necessary corrective actions as needed. So the few other scope and nature of financial management is listed in our presentation. The first one is, finance is a foundation of economic activities. The person who manages finance is called as financial manager. Important role of financial manager is to control finance and implement the plans. For any company, financial manager plays a crucial role in it. Many times it happens that lack of skills or wrong decisions can lead to heavy losses to an organization. So, it is very important that the financial manager knows his job well, because the financial health of a company is his responsibility. Next is, financial management is an important function in company's management. Financial factors are considered in all the company's decisions and all the department of an organization. It affects success, growth, and volatility of a company. Finance is said to end up being the lifeline of a business. So in the second one, money is an instrument to fulfill the requirements, but finance is a technique to manage money or money-related transaction in an effective manner. So right from the conceiving idea to start a business to its liquidation of the business, finance is playing a very dominant or important role. Therefore, finance is called the lifeblood or lifeline of a business organization. Without it, the heart or brain of a business cannot function. The third one, finance management is one of the important education which has been realized worldwide. Nowadays, people are undergoing through various specialization courses of financial management. Many people have chosen financial management as their profession. So doing a management course related to finance or gaining a finance degree offers excellent career opportunities. For the conclusion, finance is an essential element of every business. At every step of the business, finance plays an important role.
John Dale M. Norship. Sa akin po is yung the nature of financial management is closely intertwined with various aspects of an organization or individual's overall operations. Even as an operational manager or functional manager, one has to take responsibility of financial management. Financial management is an integral part of any managerial role, whether it is at operational level or functional level. Regardless of the specific responsibilities of a manager, they need to have a basic understanding of financial management principles and be able to make informed decisions that have financial implications. Operational managers are responsible for day-to-day activities and ensuring that operations runs smoothly. They need to understand the financial implications of their decisions, such as budgeting our resources, managing costs, and analyzing financial performance indicators. By effectively managing financial resources, operational managers can contribute to overall financial health of the organizations. Functional managers, on the other hand, oversee specific departments or functions within an organization, such as marketing, human resources, or production. They also need to consider financial factors when making decisions within their respective areas. For example, a marketing manager needs to allocate budget for advertising campaigns, while a production manager needs to optimize production costs and manage inventory levels. Financial management is not a separate entity but an essential aspect of managerial roles at all levels. Managers need to understand and apply financial management principles to ensure the success and financial well-being of their organizations. Next is the nature of financial management is indeed multidisciplinary. It draws upon various fields of knowledge and expertise to effectively manage financial resources and make informed decisions. Financial management indeed operates within a multidisciplinary framework, drawing heavily from various fields such as accounting, banking, economics, and even broader economic factors like inflation. Accounting provides the fundamental language and framework for financial information. Banking facilitates the movement and allocation of funds, while economic conditions like inflation and broader economic trends significantly influence financial decision-making. This interdisciplinary nature allows for a comprehensive approach to managing and optimizing financial resources within an organization's or individual's purview. Next is, by serving a backbone in commerce, economics, and industry, financial management becomes a foundational element that supports the effective functioning and growth of these sectors. It goes beyond the confines of individual businesses to impact the broader economic landscape. The principle of financial management provide a framework for decision-making, risk management, and resource optimization, contributing to the overall health and development of commerce, economics, and industry. For our conclusion, financial management is a vital function that encompasses strategic planning, organizing, controlling, and directing financial resources to achieve an organization's goals and objectives. It involves activities such as financial planning, capital budgeting, financing, cash flow management, risk management, financial reporting and analysis, and financial control. Financial management is not limited to business functions but extends its influence to commerce, economics, and industry. It serves as a backbone for these sectors by providing a framework for decision-making, resource allocation, and financial sustainability. Therefore, financial management plays a crucial role in the success and growth of organizations, contributing to their financial health and stability.